Hello everyone, my name is Michael and this is The Evolving Trader, and we have reached part 7 of a basic and effective technical analysis setup. This is going to be the last video in this series. Hopefully I'll be able to do a good job of tying everything together. We do have a lot to cover here, so before we get started, go ahead and make sure you hit that like button. Definitely subscribe because like I said before, this is just the beginning. Plenty more videos are going to be coming after this, and then make sure you hit those alert buttons to know when we are coming out with a new video. All right, let's go ahead and hit the disclaimers. Once again, everything here is for educational purposes. Although in this video you're going to most likely see me go into a trade, once again it's all for educational purposes. I'm not telling you to do exactly what I do. By the time you watch this video anyway, it's going to be too late. The time will be way past. So please don't do exactly what you see here, because you definitely most likely won't be able to imitate me actually going in on that particular trade, because this is not live recording. Once again, if you want, take a pause to read the disclaimers, but we are about to go ahead and get this rodeo started. Okay. This time, as you can see, I am not in a paper trading account. This is my live account, real account here. Just to give you a brief overview here, this is my Workstation watch list. This is the watch list that I usually keep up when I'm keeping an eye on a stock that I'm potentially looking to get into. Alright, as you can see, I have I have the net change, so I have an idea of where the stock is right now. And then over here, this is my relative strength indicator. This is another tool that I use, very, very important tool to be able to see the strength of the particular stock, because relative strength is a way that you can look for value stocks to pay attention to. If you want to know how I know which stocks to pay attention to, this is what I look at right here. Once again, color coded, just like everything else I've shown you. You know, I am a very visual person, so everything is color coded, very easy. The dark greens are like top cream of the crop, but usually with the dark greens, when they're 100 over 90, you're gonna find stocks where the RSI is above the overbought line. That's almost always the case. All right, so let me give you an example here. Look at this, over 97. This one is just at the line, about to go over. Yeah, it looks like it's about to break into a big upward trend here. So this is a solid one to look at. As you can see here, this is exactly what I've been showing you for the past few weeks. This is what I use. This one right here looks pretty good at a 78 relative strength. Highly going up. Now, some people would say getting in right now might not be good because I've already missed the mark. And usually that could be true. In the system that I've shown you, the most ideal scenario is for you to get in around here when the red cloud is closing and about to change into a green cloud. That is the most ideal way to use the setup that I have shown you. All right, so I'm not really gonna jump into this because it's been a long run. It's an excellent run, and I'm not saying that it's not gonna do another run like this again. But as you can see here, looking at the cloud, it's starting to even out here. This candlestick is going down. Chances are this upward run has come to an end. on this. So it would kind of be foolish to really jump in on this right now. Let's look at some more stocks. Go over here. Here's another one, 99. This one looks like it might be on its way back down from the RSI line. So even though it's showing a strong up right now, we don't know. Oh yes, and by the way, this is a daily chart in case you were wondering. So each of these candlesticks represents a day within the 3-year period. All right. So this one is a big, I don't know. When I'm on the fence, I like to actually go to the TD Ameritrade website to get some more information. And actually, let me get that over here. And what stock is this? TWST. All right, there we go. TWST. Now, this is the TD Ameritrade website. Very informative. There's definite information in here that I find a whole lot easier. You could probably find the same information in Thinkorswim, but to me, it's a whole lot easier to come and look at it from here. All right. So, the SMART score. This is my other little trick here. I look at the SMART score. Right now, even though the stock is going up, a lot of professionals are saying that this stock is underperforming. Moderate buy, saying sold, decreased. Even though it's saying bullish, you see a lot of iffies. So what I like to do when I come into the TD Ameritrade site, I like to look at the SMART score, right? Normally, if it's 6 and above, I'll jump in. Especially if it's between 6, 7, 8. To me, those are great because this is updated daily. As you can see, what does it say here? Yeah, the score is updated daily. It says it right here. So I would like to see it at a 6, 7, 8. You know, if it's at a 10 already when I'm in here, chances are it's about to start going down because it's getting too much attention, too much drive. So this is the numbers that I prefer. So because this is at a 2, I'm gonna definitely leave this one alone. Okay, let's look here. Another one above. Looks like it's getting ready to go on a downward trend. You can kind of see the green cloud about to close. So I'm about to leave this alone. And since we're already towards the bottom here, might as well keep going. Take a look. Okay, now this one here is showing some promise. This is one of those great examples of when you want to come in. Great example. Look at that. This one is showing that it's about to turn green. The cloud is about to go green. So this will be a good place to take a look at. What is this stock? SQ. Let's see what it says here. Look at that. It's already at a 10. So because it's at a 10, there's a strong likelihood that it's about to go down. But, you know, let's take a look in here. Look at the details. See what they're saying. Moderate buy, average price target, increased, very positive, positive, very bullish, bullish, very positive. All right. So I may actually keep an eye on this a little bit longer. I want to see, for something like this, looking at how, oh, look at that, it's right under the line of being overbought. So this could be an excellent opportunity for us. Just about to close on the red, right? And once we see that green, so I think I'm gonna watch this tomorrow to see if the cloud actually starts changing green. In that instance, I'd probably jump in on this. But right now, I think the one that I'm really keeping an eye on has been NEO. NEO has been the stock that I have been really keeping an eye on. It's been gaining a lot of popularity. Let me show you here. At an 8, exactly where I want it to be, and it's been dipping. It has been dipping. So everything is looking perfect for jumping into NEO. Here, bullish, very positive. Now another thing I like to do is I look at this to try to figure out what my exit strategy is going to be. Remember earlier on I had mentioned in a previous video, when you're going into a stock, you want to have an exit strategy. Okay? The exit strategy needs to be fluid, but you still got to have one. All right? Because that gives you an idea or get you some parameters to know when to jump out. All right, so let's look at NEO. Take a close look at NEO. I know one of my friends on here said that he lost some good chunk of money on NEO. I traded NEO I think a couple of years ago, made a couple of bucks on it, but it didn't catch my attention enough to hold it long term. I wish I would have, because look at the jump that it has done. Look at that. It was a penny stock. NEO was a penny stock. At the beginning of the year, NEO was practically a penny stock. Look at that. Down at $3.27. Anyone that bought like 1,000 shares and just held it until now is eating caviar. You know, I wish I had that wherewithal, but at the time I was thinking day trading and I was not confident enough in NEO to hold on to it. But NEO has gotten pretty solid, especially with what's going on politically. I believe that also plays a factor in NEO, being that it is I believe it is a Chinese-based company. So we're looking at NEO right now, and take a look. Exactly what I said. It's about to close. So this looks like a perfect stock to get into right now. Right? Going down, but it looks like it's staying at around here. Let me change this so I can see what's going on in a 5-minute chart. Oh. Okay. I wish I could have a better view of it. Alright, so it looks like it's still dropping a bit within the 5-minute chart. Let's look at a 30-minute chart. Still dropping on a 30-minute chart. Dropping on a 1-minute chart. Okay, so this is just dropping straight down. There is no reason for me to jump in on this right now. Even though I'm going to be swing trading this, there is absolutely no reason for me to jump in right now. because as soon as I go in, I'm just gonna start losing money. What I want to do is jump in at a point where I am instantly making money. So let's go back to our daily chart. So what I'm gonna do with Neo is I am gonna keep an eye on it. I'm gonna keep an eye on it and wait to see where the green cloud is gonna go. So as you can see here, folks, I'm using everything that I have taught you. I'm using everything that I have taught you throughout this series on how to trade. Now I'm showing you the inner workings, the thought process of actually going into a trade. Now, let's go ahead and add a little bit more time here. Let's go ahead and continue on with this idea. Let's say I'm gonna buy Neo right now. I'm not going to, obviously not. It's still too early. Like I said, I'm very conservative. I'm waiting for the confirmations to definitely jump in. And when I jump into a stock, I want to make sure that I'm going to be making money right away. All right. I think it's even though I'm going to be swing trading it, it's still a dumb idea to go into a stock and you're losing money as soon as you go in. So the timing for me is important. But let's say we're going to go into Neo right now. Right? So I'm going to come over here and I could hit the buy, but I'm not going to do that. I always do buy custom with OCO bracket. Why am I doing it with the OCO bracket? Easy. Because if it reaches the target that I want to and I'm not available to see it, I want it to sell. Also, if Neo does not do what I'm believing it's going to do, if I'm wrong in my decision making, I need a insurance that I'm not gonna blow out my account, that it will stop at a certain level and will jump out. Okay? Now there are pluses and minuses to using an OCO bracket. A plus is that you are definitely managing your risks, and managing your risks is a top thing, is the most important thing, I would say, when it comes to investing in the stock market, is knowing how to manage your risks. So right now we're looking at, I'm probably not gonna do 100. If I'm really gonna do this, I'm probably gonna buy 10 shares. So you want to make sure you change all of these to the same number, because then you're gonna run into some problems. Now, limit, buying in with a limit is buying with a set number in mind. You're telling the system, okay, this is how much I want the stock to be. If it reaches this price, get me in, right? So if you want to do that, great. Most of the time, I don't do that. There are some times when I'm like, okay, you know what? I'm going to get into this stock if it hits a certain number, and I'm not going to keep an eye on it to see if it hits that number. So I'll hit an OCO bracket to initiate the sale. But very few. I think I've done that like maybe 8 or 10 times in the 16 years that I've actually traded. So normally what I'm going to do is go in market. I'm saying I don't care. I'm just jumping in, okay? And this is for that day. Now for these other two here, I'm going to change this to good to close, good to close. Because these are going to stay as your insurance, right? Now you got the limit, which is how high, what's the highest you want it to go. And then you got the stop, which is what is the lowest you're willing to accept. Normally, I don't adjust these right at the bat, and I'll explain why. For Neo, though, I think I will go ahead, and I'm basing my decision here on the fact that it has already reached $57.02. So I am going to go for a $10 bump on this. So I am going to go for $55. That's going to be my limit on this swing trade. And as far as the bottom, I'm going to keep the bottom where it's at, because I might adjust that each day depending on what the charts are telling me. All right. So now, how do I know how much money I'm going to make once it reaches $55 at $10 a share? Very easy. Go up to the green line, right click, and then select Analyze Trade. Folks, I haven't had you do any type of calculations during this whole series, have I? Why? When system can do the calculation for you. So here is the trade that I'm looking at getting into. So this red line represents where the stock is at right now, where I'm possibly about to jump in, right? So this little red line will move from time to time. So we're looking at, let me move this over more, $55, 10 shares. So here's the 55 line. So I would be making $107 on the trade, give or take. About $100, round it out, on this trade when it reaches the 55 mark. Now, if you want to, let's say I said, you know what? Let me change my mind. Let me make it 100. Bam. Now you can take a look and see how much money you would make if you bought 100 shares. And that would be over $1,000 if I bought 100 shares. But I'm not that comfortable with Neo, so I am gonna stick with the $10. So you can adjust this however you want, to get the money that you're looking for, right? Like I said, I'm a very conservative trader. You know, $107 on this trade to me is a very good deal. Very good deal. So when I see the cloud reach that green status, and I see that the current trend shifts to an upward trend, then I'm gonna most likely jump into Neo with buying 10 shares, and expecting it to get to $55. Why $55? Because it already reached $57. So I know it can get to 55. Now here is the thing. Let's say you go ahead and you jump in. Let's say I go ahead and I jump into the stock right now. And I have my limit set at 55, and when it gets to 55, or when it gets to like 54 or $53, it's somewhere like this. Or let me see if I can find one. Here's a good example. Let's say, now obviously this is not Neo, but just giving you an example. It reaches 55 or 54, and you see it's still like this or like this, you know? Then I would go in and I would adjust my my limit. I would adjust my limit a little bit higher, but you got to keep an eye to see that a little bit higher. And once again, you got to keep an eye on what the candlesticks are showing you, so that you know that, okay, I might need to just jump out. Maybe I got too greedy. Okay? So you can do it. You can play it one of two ways. You can say, okay, let's say this was INO. You came in around here. It reached $54. Let's say here, $54 right here. And you're like, okay, it looks like it's still going up. I don't see a reason to get out. You can leave it as is, take your money, be happy. Or you can look at the... I wish I had an example here. If I could find one to actually jump in on, I will. And actually, you know what? No, this one's not a good one. Because this run has been going for far too long. Let me see what our little analysis setup says here about this particular stock. NTLA. Nine. All right. This looks pretty good. This looks pretty promising. Alright, so it's already went over the average price, but most of this is showing good. See, this is the decisions that you have to make as a trader. Now, because these lines are so close together, this could change at any moment. The thing that concerns me is this inverse hammer at the top. If you've been following my series, I believe it was video 3 where we talked about reversal patterns. This is a strong reversal pattern right here. I'm not gonna do it. You know, had I found it over here, I probably would have been like, yeah, let me jump in. Because this indicator right here said, okay, it was time to jump in, and look at how good it did. But being that it's so far up, I would be chasing it. So I'm not gonna do it. I wish I would have found a good stock to jump in to show you an example. But it just doesn't work out sometimes. Oh yeah, and that's the other thing. Folks, don't force situations. That is something I learned the hard way. Just because you want to be a day trader doesn't mean you have to trade every day. As a swing trader, obviously I don't have to buy every day. As you can see, I have a nice little setup going on with Neo. I'm gonna wait to see it start going back up, and I'm gonna jump in on it at that point. Sometimes you have to wait. You have to be patient to get in at the right time. Because as of right now, if I go into Neo, I'm definitely losing money. As soon as I get in, I'm gonna lose money because the candlestick is red. So you have to put a lot of things into perspective. Don't rush. One of the biggest things that people do that hurt themselves in the stock market is get that antsy, oh, I am missing out moment. That's another reason why a lot of people lose their money. Don't be afraid to miss out, okay? Because guess what? Just like we saw this right here, we're gonna run into this again. You're gonna see this every day. There is a stock right now that is starting. In fact, that's why I came over here. I'm going to split. I'm gonna put this on another screen. Yes, I do have multiple screens. Serious trader here. Let me detach. There we go. So basically, this setup here is on my other screen, as you can see over here. And I'm gonna go to the charts, and I've already got this linked with the charts. So let's take a look here. So this is really the biggest, this is one of the biggest parts of being a trader, is knowing when to go in and having the confidence based on what you are seeing the stock doing to say, okay, it's time to go in. So GameStop, oh man, I missed my opportunity. Actually, I was looking at GameStop a few weeks ago. But it was over here when I was looking at it, and I got impatient and I lost it, and then look, could have made some decent money. Oh well. Okay. So as you can see, all I'm doing is looking and letting the chart show me what to pay attention to, what not to pay attention to. Now there are a couple of other things I want to go over before I close the video out. It doesn't look like I'm going to find anything to trade. Oh, wait a minute. GP looks promising once again. As a swing trader, this looks very promising, right? And the fact that it had recently hit this high right here, I love it. I love it. So I could sit here and say, all right, let me pick a decent number for this. Once again, what is this? GP. Let's take a look and see here. Six. Beautiful, beautiful number. Love that number. Look at where it is in the RSI, right in between the lines. Perfect. Perfect. So now I am going to actually put this on my list. And what I'm gonna do, once again, just like with Neo, I am gonna wait for the green cloud to appear. Now, some people will probably say now's a good time to jump in. You can do that too. And the only reason why I'm not doing that right now is because I just found this right now. Had I been keeping an eye on it for weeks, like I have been doing with Neo, then I probably would have jumped in. But the only reason why I'm not jumping into Neo right now is because I'm definitely losing money. And once I jump into a stock, I don't want to be in a position where I'm instantly losing money. I want to be in a position where I'm instantly making money. All right? And it's okay if I go neutral. And it's okay if I drop maybe a penny. But I definitely don't want it to just be going straight down when I jump into the stock. Right? And the way to avoid that is by having these different times I showed you. The 5 minute, 15 minute, 30 minute, 1 hour, 2 hours, 4 hours, depending. You take a look at it, see what's it doing. And look at this. GP is in the process of getting ready to go on an upward trend within the 5 minute time period. As you can see here, the cloud, let's see if we can get a better look here. Cloud is red, coming to an end, about to go green. So actually now is a good time to jump in. So I'm gonna take out my trusty calculator, and it looks like you are gonna actually see me do, and this is what I love about swing trading. I can take my time. If this was a day trade, I have to move much quicker than what I'm doing now. But since I'm swing trading, I can take my time. I have like another 5 minutes before I say, okay, let me jump in. So let me see. All right. So gonna do my OCO bracket. This time I'm gonna go with 25. Oh, I did 20. 25. All right, and just to make sure I'm not wasting my time, I'm gonna do the analyzing. I'm gonna go here. See, it reached 30. So what I'm looking for this one, really, the $25 mark is what I'm really looking for with this. Let's go back here to the chart. Where was that high again? Here, it reached 32 high looks like, yeah, last week, maybe a couple of weeks ago. It reached the 32 high. So I'm not getting greedy. I don't want it to go over 32. I mean, if the stock does, great, and most likely it will, looking at all of the numbers. But what I'm looking for is something that it has been fiddling around, and I believe 25 is a good number. 25 is an excellent number. So I'm gonna change this to 25. I'm gonna change this to good to close. Good to close. Now the GTC stands for good to close, and what that means is that this limit is going to be available for up to 6 months. It doesn't stay forever. It stays good for up to 6 months, and once the 6 months is done, it disappears. All right. So for up to 6 months, if this stock reaches 25, it's gonna go out, right? But of course, I'll keep an eye on it each day. I love looking at the daily chart, because it's giving me a good idea of what's happening from day to day. And this stock right here was just perfect to jump in on. Perfect to jump in on. Its relative strength is 65, which, another thing, like I was saying before, you want a good relative strength from 60 to 70 is perfect. 60 to 75 would be perfect, because you want to give it that room to hit 100, and you don't want it to be too low. So 60 is like the lowest I would look for as far as the relative strength. So everything meets my criteria for this stock. And especially looking at the 5 minute, look at that. There's the arrow. Just got going up. Let's see what the 15 says. 15 minutes says it's gonna go down. Within the 30, it's been dropping in the last 30 minutes. Okay. And then hour down. So none of these have gotten the up yet. except for the 5-minute one. So hopefully oh yeah, because of this you can't see it good. So I'm still gonna go in. Everything is pointing in the right direction. So I'm gonna go ahead and jump in with my 25 shares. Make sure everything is good before I hit the sell. Now the bottom I usually leave alone because I'll probably end up adjusting that later on. Let's hit confirm. Okay, so I'm spending just under 500, just about 500, which is my comfortable range. And there we go. Now, remember how I was talking about I'll be adjusting it later on? Look, I can move this line at will. This is how I would adjust it. So I'm gonna leave that up there because this is where I want it to go. So basically I have my OCO bracket in place, right? And hopefully, you know, all the signals showing I reached the bottom of the 5-minute and that is gonna start going up. The daily chart showing me that it's about to close. So even if it doesn't turn, even if the cloud does not turn green tomorrow, I'm not expecting it to turn green today. I'm expecting it to turn green tomorrow. You want to catch it right before it turns green so you can get that up, that perfect upswing like this, right? That's what you're looking for. You're looking to jump in right here and catch this. That is what you're looking for. Give you another example. You want to catch it, once again, right here, going into the green cloud, going up. All right, now look at this. Let's just look at this swing trade right here. This is a swing trade. This stock closed at around $53 when the signal came to buy, right? You got the green cloud. It starts dropping right here. It starts evening out. This is where I would jump ship. I would jump ship at this one or this one right here, right? Because you can see the gap is closing on the cloud. So pretty soon, tomorrow, most likely, the cloud is going to switch into a green, into a red, indicating it's going down, and the signal is going to appear for it to go down. All right, but look at this. Look at this. Around $53 up to where's the top of it today? Well, I'll say the bottom here, $99.46. Do you see how the system works, folks? Today, I hope, was very valuable to you. That you got to see the inner workings of how my mind works going into a trade, what I'm looking for. Everything that I did, there was no emotions involved to it, was there? There was no, no, I'm looking at the chart. I'm looking at what my system is telling me. And I'm responding accordingly. Now, the big thing is once you get into a position, you have to be flexible to jump ship. When the market tells you, that's the other thing. That is the other thing. All right. Once again, like I've said, and I think I've said it in just about every video in this series, you don't want to predict, right? You saw me go into a position today. I am hoping that I made the right decision. I'm hoping that it turns out good. However, we don't know what tomorrow holds. It might not reach that $25 mark. It might get into a sideways trend where it bounces between 23 and 19 for the next, for the next 6 months. Who knows? You have to be flexible enough once you go in to say, okay, this is what my goal is. But if this is not what the market is giving me for this stock, then I need to accept profit where profit is. All right? And folks, once you close a deal, once you actually get out of a stock, don't start beating yourself up if the stock continues to rise. Okay? Every trade, every opening and closing of a position is a new trade. All right? Every opening and closing of a position is a new trade. So you have to train your mind to accept that once you're out, that's it. That's over. Don't even think about the trade that you just did. Focus on the next trade. And if it means going back into that stock because it's still performing, then do it. If it's still going in the direction you want it to go, then go ahead and do it. Well, I hope that my goal was actually reached on this video, that you were able to see me actually go into a position. You saw me scanning for stocks, looking for the right position to jump in, and then making the move. If you have any questions, my email is going to be at the end of this video. We are on Facebook. We are on MeWe. We are on Wimkin. Got groups there. You can join us on one of those. You can definitely email me. Email will be shown at the end of the video. Once again, folks, we're only getting started here. Only getting started. There will be more videos. I am going to do a video on introduction to options trading, introduction to Forex trading. I'm going to do a series of videos of different indicators that I didn't present in this video that might benefit you in your endeavors to trade. We're just getting started, folks. Just getting started. So, folks, this is it. Once again, my name is Michael Robillard. This is the Evolving Trader. And I hope you have grown and enjoyed this series. This is the last video for a basic and effective technical analysis setup, part 7. I enjoyed doing this video for you. I hope you enjoyed watching it. I will definitely see you soon.